In the words of George Soros himself, it's not whether you're right or wrong that's important, but how much money you make when you're right, and how much you lose when you're wrong. This encapsulates the essence of a man who has defined and redefined the world of finance. Born in Budapest, Hungary, Soros's life was marked by survival from the start. During the dark days of World War II, he managed to evade the Holocaust, a feat that would shape his resilience and tenacity in the years to come. After the war, Soros migrated to England, seeking refuge from the remnants of a war-torn Europe. It was here that he enrolled in the prestigious London School of Economics, setting the stage for a career that would make him one of the world's most prominent investors. From the ashes of his tumultuous past, Soros rose to become one of the world's most influential investors. The name George Soros became synonymous with successful investing when he bet against the British pound in 1992. This was no ordinary gamble. Soros was convinced the pound was overvalued. The markets, the government, even the global economic indicators all suggested otherwise. But Soros saw something that others didn't. He saw an opportunity, a chink in the armor of the British economy. So he made a bold move, a daring leap into the unknown. He bet against the pound, a decision that would either make him a laughingstock or a legend. The world watched and waited. And then it happened. The pound fell. Soros's prediction was right. In a single day, he netted a staggering $1 billion. This trade not only made Soros a billionaire, but it also cemented his reputation as one of the most astute investors of his time. His quantum leap into the annals of investment history was complete, forever etching his name in the proverbial Wall Street stone. Soros once said, "Markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected." In the world of finance, George Soros is a titan, a man whose name is synonymous with success and wealth. But what is the secret behind his success? It's his unique investment philosophy, known as reflexivity. Reflexivity is a theory that Soros developed early in his career. Essentially, it is a theory that posits that investors' perceptions of the market can influence the market itself, creating a feedback loop that can lead to booms and busts. The market isn't just influenced by the fundamental factors like supply and demand. The perception of investors deeply molds the market behavior, further influencing the investor's perception and so creating a feedback loop that can drive prices away from their fundamental values. Soros believes that the financial markets are inherently unpredictable and often irrational. They are, in his words, in a state of uncertainty and flux. And it's in this uncertainty and flux that Soros found his opportunity. He doesn't try to predict the market's movements, rather, Soros focuses on identifying these moments of reflexivity, these instances when the market's behavior is being driven more by the perceptions of investors than by fundamental values. Soros puts this philosophy into practice by keeping a vigilant eye on the market, looking for signs of reflexivity. He looks for patterns, for shifts in investor sentiment, for moments when the market's behavior seems to be deviating from what the fundamental factors would suggest. And when he spots these moments, he acts, often making bold, contrarian bets that go against the prevailing market sentiment. It's a strategy that requires a deep understanding of the market, a keen eye for detail, and a willingness to take risks. But for Soros, it's a strategy that has paid off handsomely. Over the course of his career, he has made billions of dollars, proving time and again that his theory of reflexivity is more than just a theory. It's a practical, effective strategy for navigating the unpredictable, often irrational world of the financial. Soros' philosophy of reflexivity has been the backbone of his investment strategy, a strategy that has made him one of the wealthiest men in the world. However, like any influential figure, Soros' success has not come without controversy. The tale of George Soros is not without its darker chapters. His role in the Asian financial crisis of the late 90s, for instance, garnered him notoriety. Critics accused Soros of sparking the crisis by aggressively selling the Thai baht and the Malaysian ringgit, contributing to a regional economic downturn. In Malaysia, the Prime Minister even went as far as calling Soros a morality crisis. Then, there's his political activism. Soros has been a vocal critic of various governments and has used his vast wealth to support political causes he believes in. This has drawn ire from those who view his interventions as undue influence, questioning the extent to which one individual should have the power to sway political landscapes. And let's not forget the conspiracy theories. From being accused of orchestrating global events to being the puppet master of a supposed New World Order, Soros has been the subject of many unfounded and frankly, outlandish theories. Despite the lack of credible evidence supporting these claims, they continue to circulate, fueled by the mystique surrounding Soros's immense wealth and influence. However, it's important to remember that while Soros is a man of undeniable influence, he's also a man of conviction. He has consistently used his resources to champion causes he believes in, from promoting democracy in Eastern Europe to funding initiatives aimed at reducing poverty and enhancing education worldwide. He's also been forthright about his actions. In response to the criticism surrounding the Asian financial crisis, Soros acknowledged his role but also pointed out that market vulnerabilities were already present, and his actions merely exposed them. In the end, the controversies surrounding George Soros paint a picture of a complex character. A man who wields immense power and isn't afraid to use it, but also a man who is deeply committed to his beliefs. Despite the controversies, Soros's impact on the world of finance and his philanthropic efforts are undeniable. Soros once stated, "My success in the financial markets has given me a greater degree of independence than most other people." Independence indeed, and a legacy that continues to shape the world of finance. Soros's achievements are numerous, from his infamous bet against the British pound, which earned him the moniker, "the man who broke the Bank of England," to his establishment of the Quantum Fund, one of the most successful hedge funds in history. Beyond finance, Soros's vision of a free and open society has guided his philanthropic efforts. His Open Society foundations, working in over 100 countries, champion human rights and democratic governance, reflecting his deep-seated belief in the power of freedom and openness. In the grand tapestry of finance and philanthropy, George Soros's impact is indelibly woven into its fabric, a testament to his unique perspective on investing and his unwavering belief in the power of open societies. In the early 1990s, the British economy was under strain. The government had tried to stabilize the pound by linking it to the German mark through the European Exchange Rate Mechanism, or ERM. However, many investors, including George Soros, believed this was unsustainable. In fact, Soros was so convinced that he decided to take an enormous risk. He bet against the British pound. Soros's Quantum Fund began to aggressively sell the pound in September 1992. On September 16, now known as Black Wednesday, the Bank of England was forced to withdraw the pound from the ERM after failing to keep above the agreed limit. Soros's bet paid off spectacularly, netting his fund an estimated $1 billion in a single day. This audacious move earned Soros his infamous moniker, "the man who broke the Bank of England." More than that, it highlighted the power of financial markets and the potential of hedge funds to influence national economies. This event not only solidified Soros's reputation as a master investor, but also demonstrated the profound impact that one individual can have on the global financial stage. And it is this legacy that continues to shape the world of finance today.